Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's a bit like a financial roller coaster, so buckle up. We will dissect a filing that might sound as thrilling as watching paint dry, but trust me, there are hidden gems inside. Did you know that seemingly calm investment funds can sometimes reveal surprising shifts in their strategies and holdings? In this video, we're going to decode the latest shareholder report from Advisors Series Trust, focusing on the Shenkman capital funds. It's a semi-annual checkup, a snapshot of how these funds are performing and what they're investing in. We'll look at key performance metrics, portfolio composition, and any changes that might affect investors like you. But before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. First, let's talk about the Shenkman Capital Floating Rate High Income Fund. It aims to give investors high current income by investing in floating rate instruments, or loans that don't have a fixed interest rate. What did it cost to run this fund? Let's take a look. For the Class F shares, the costs for every $10,000 invested were about $28 over the last 6 months. That's an annualized expense ratio or cost of 0.56%. Some key numbers. The fund had about $273.8 million in net assets. It held 486 different investments. The portfolio turnover, meaning how often the fund buys and sells its holdings, was 48%. The 30-day SEC yield, which shows how much income the fund is expected to generate, was 7.60 to fund's debt holdings. Shenkman Capital's floating rate income fund had an average credit quality of B1 J+. This is considered below investment grade or junk, meaning it's a riskier debt. What was the floating rate fund investing in? Looking at the top 10 holdings, we see First American Government Obligations Fund. This single holding made up 5.4% of the fund's net assets. Then we see Invesco Senior Loan ETF at 2.8%. The other 8 holdings include several corporate bonds. If you want to see how the fund has performed since this report, you can visit the Shenkman Capital website. I'll leave it on the scroll tag for you to see. Now, let's move on to the Shenkman Capital Short Duration High Income Fund. How much did it cost to run this fund? For the Class A shares, the cost of a $10,000 investment were $48 over the last 6 months, which is an annualized expense ratio of 0.95%. This fund had a whopping $1.49 billion in net assets. It held 359 different investments. Its portfolio turnover was 30%. The 30-day SEC yield was 5.05%. The average credit quality of the fund was B1/B, again below investment grade. Again, the fund invested in First American Government Obligations Fund, which made up 3.3% of the fund's assets. Then we see Tenet Healthcare Corp and International Game Technology PLC in the top holdings. Check out the link in the scroll for more information. Alright, now let's move on to the financial statements because that's where the real story is. What exactly do those mean? Well, the statement of assets and liabilities can tell you what the fund owns assets and what it owes liabilities. If you subtract those, you get net assets or total value. For the floating rate high income fund, its investments were valued at over $284 million. The cost of those investments was even higher at $288 million. So the fund has seen a small loss in some of their holdings. The investments for the short duration high income fund were valued at $1.49 billion with an investment cost of $1.48 billion. It looks like the floating rate high income fund had a net realized loss on their investments for the 6 months ending March 31, 2025, which was about $26,000 on the other hand. The short duration high income fund had a net gain of about $4.4 million. The statements of changes in net assets will show us how the net assets have changed over time. For the 6 months, the floating rate high income fund grew by about $7 million. Looking at the bigger short duration high income fund, it grew by over $32 million. One important comparison is the fund's ratios of expenses to average net assets, which is total operating expenses divided by total assets. Tells you what percent of the money invested goes to operate the fund. Both the floating rate high income fund and the short duration high income fund are at about 0.7% expenses. So these funds are cheaper to operate than its alternatives in the industry, which usually is above 1%. Lower costs mean more returns for invested expenses. So these funds are cheaper to operate than its rates alternatives in the industry, which usually is above 1%. Lower costs mean more returns for investors, so something to look at. The Board of Trustees approved the investment advisory agreement with Shenkman Capital Management. As it states, there was many factors considered, including the nature, extent and quality of the services provided by the advisor, as well as a benchmark and cost comparison. Finally, let's see if there were any accounting changes, and no, there were no changes in or disagreements with accountants during the period covered by this report. No red flags. Moving on. Alright, that's the filing. I would also like to mention that the interest rates are very variable at the time of writing, and as always, you should do your own research before investing. Now, looking at these results more broadly, both Shenkman Capital funds are navigating a tricky high-yield environment. While they're focused on generating income, their performance is heavily influenced by credit quality and interest rate movements. The floating rate high income fund's exposure to lower rated debt presents higher risk, especially if the economy slows down. The short duration high income fund shows a more conservative profile, but it's still sensitive to credit spreads widening. Both funds' expense ratios are great compared to their peers, but the key will be watching how effectively Shenkman manages credit risk and adapts to changing interest rate conditions. Investors should keep a close eye on those factors and the overall economic landscape. For the funds to provide attractive returns and consistent income, these aspects need to be monitored. Alright, that's our breakdown of Shenkman Capital's latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.